You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 28th day of April, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, just go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. And on the days you're out of the office, away from the desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us stream live during the show on YouTube, Facebook, and Twitter. Let's open with a word of prayer. Today we're going to pray for the caregivers, the ones who are putting their lives on the line to help others. Father, we come today to pray for those who are caring for the sick. It takes a kind and selfless heart to care for those who are sick. And so we pray for them today. We pray, God, that you would be their source of rest, their source of replenishment when weary, and their source of hope in such overwhelming times. God, we know in Luke 6:38 that whosoever pours out shall be given back in proportion. So we pray blessings upon these caregivers. We also, God, pray for their health, that they may not fall ill. Father, protect them with a hedge of protection against the germs of coronavirus, and help those who are giving to be protected as they nurse others back to health. Bless them, oh God. In Jesus' name we pray. Amen. All right, let's go to a daily chart of the S&P500 Emini Futures. Interesting development. As almost every day is an interesting development of late. This began with the bearish cross back on February 27th at a price of approximately $32.72. And that led us down to a swing low on March 23rd at a price of $21.74. Buyers came in, drove price back up to where we would expect to find resistance at the BBC. And BBC just stands for bull bear cross. When price crosses below this green line, we anticipate lower prices. And when price crosses above, we anticipate higher prices. Hence the name BBC, or bull bear cross. So this applies to whatever time frame you happen to be looking at and whatever market you happen to be looking at. Here we're bearish, here we're bullish. Now, price always reverts to the mean. Now, that, regardless of the methodology, regardless of the strategy, regardless of whatever indicators may be used, price always reverts to the mean. In our case, the mean is green. Okay, so as price rallied back up and found resistance as we anticipated, resistance will send price in search of support. And this little indicator here, technical term is CFMA1. We just call it, I call it red and falling, blue and climbing. When we approach blue and climbing from above, we expect it to be good support, and it was. It sent us back to the BBC, and we didn't get through on the first attempt, we didn't get through on the second attempt, but we did manage to close on the other side of the BBC on the third attempt. That began a bit of a rally that took us up to a swing high at 28.85. And if we look left, that important price, important area was first highlighted here. In this falling market, we found support, got a nice bounce, came back to it, bounced part of the session, but then ultimately we fell through that area. And then when price found support, it ran back up to that area, which is also now red and falling. Red and falling sent us to the low. And of course, we just discussed resistance at the BBC sent us to blue and climbing. Blue and climbing got us above the BBC. But then we ran into resistance at an area we would anticipate because of this, and this. And sure enough, it was good resistance. And when price can't trade any higher, it will turn around and go look for support. Just as when we approach the BBC from below, we expect resistance. When we approach from above, we expect support. So support sent us back up to that same important price, important area that we've been talking about. This time we ran into not so much red and flat as red and falling. So we managed to close green above red and falling yesterday, but not above it far enough to change it back to blue and climbing. On the open last night, we traded higher. We've reversed. We've got a little doji going, the little flat part right there that represents the opening price of today's session. Now today, the Tuesday session begins Monday night at 6 p.m. Eastern. Just like tonight at 6 p.m. Eastern, that will begin the Wednesday session. So here we sit just above red and falling. If price gets back below red and falling, then we anticipate a trip back to the BBC. And at the BBC, we would expect to find good support, which would then give us another leg to the upside. If the pullback to the BBC does not hold, this is what it looks like when that pullback holds. If it fails to hold, then we will look for potential support south of the BBC right here. Now, let's jump to the numbers from around the world, the cash markets, the indices as they're called. Let me pull in some fresh data. Currently, the Dow is up 42 points. NASDAQ is down 70. S&P 500 is down just over a point. And the Russell 2000 is up 14. Okay, guys, we had a short audio issue there for a moment. I think I got audio restored. So let me give you those numbers from around the world one more time. Dow up 42 points, NASDAQ down 70, S&P 500 down just over a point, and the Russell 2000 up 14. In the commodity basket, crude oil down 89 cents, trading 11.89 last. That's a drop of 7%. Gold down $4.30, trading 17.1950 last. In the Asian markets at the close, Nikkei down 12 points, Shanghai down 5.5, but the Hang Seng posted a gain of 295 points. That's a little over 1%. In the European markets at the close, FTSE posted a gain of 111, almost 2%. The DAX posted a gain of 135, 1.25%, and the CAC gained 64 points on the session, a gain of 1.5%. That gives us a mixed day in Asia. It's a green day in the UK. And so far, it's a mixed day here in the US of A. Let's go to Michael and get a recap of everything that happened in the live training room this morning. When he's done, I'll be back, and I'm going to call John, see if he's feeling up to having a chat today. Hopefully he is. We'll also go over the Concierge Trade Alerts for this session. We'll go over the Logic 247 alerts, and of course, we'll have answers to each and all and every one of your questions. So Michael, if you're ready, you can take it away. I think that's the sound of Michael. Not quite ready to take it away yet. So let's do this. I'm going to pull up Concierge Trade Alerts from last night. And if you would like, you can grab a screenshot of those. Got them out last night at 7:25 p.m. Eastern. We covered the S&P, the Dow, the Russell, crude oil. Now, we're trading the N contract in crude. Typically, we would be trading the M contract June. But because of all that's happened in the world of crude, most brokers are only accepting orders, I believe, at this point, for not the front month, but the second month out. The NQ bonds, I haven't posted alerts on the bonds here lately. We don't seem to have a lot of bond traders. There's gold, and then here's soybeans. Now, what I recommend to all of our members that they do each evening as the alerts come out, go to the charts of the markets that you trade and put 2 lines in the sand. One for the long side, one for the short side. Because at 28.75 or above, we only want to be looking for long opportunities. And if price drops to 28.50, we only want to be looking to be short or looking for shorting opportunities. And the same applies to each one of those. Michael, are you there? Okay, he's still not back.
No, he's still not. Sorry.
Okay, no. Yeah, no problem. All right, so let's bring up a chart. Or you know what? Let me give you the recap that just came in for the Logic 247 alerts.
I'm actually updating that. If you just give me a minute, I will get
Oh, you're
that accurate.
You're updating it right now?
Yes.
Okay. All righty. So we'll bring up a chart of the S&P as we wait for Michael.
Just getting here.
Oh, you here? Okay.
Yeah.
All right then. All right, guys. So when I come back, again, hopefully we'll talk to John if he's feeling better. And then we'll go through each one of those concierge trade alerts that I just showed you. Pick them apart one by one. And we'll also take a look at the logic alerts. We'll take a look at the recap for the week on logic. All that, and of course, answers to your questions.
Yeah.
So you, sir, are locked and loaded.
Excellent. Okay, ready to go. All right. Good afternoon, everyone. Today is Tuesday, the 28th day of April, 2020. Almost in May already. If you have not taken a free trial with us, go to the homepage at cfrn.net. And where it says free 5-day trial, just click on that. It's going to bring you to this page, eminitrainingschool.com, where all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you will be sent a confirmation link. You must click on the confirmation link. Okay, we don't know you took the trial if you don't click the confirmation link. All right, results. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of April, 2020. Today we made 22 ticks in gold and 6 ticks on the ES. That put us at plus 295 on the morning session. Today took 28 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades this morning. So on the month now, we're at $7,951. That's over 19 days, averaging $418 per day. On the year, we're at $29,925. That's over 77 days, averaging $388 per contract, per 2-hour pay. And that's missing most of the trades too. I missed so many good trades this morning, on gold specifically. Now we did pick up 22 ticks on gold, and I will get into that here in a minute. Scrolling. All right, here we go. So gold started out a little bit choppy right here, but then it gave a nice shorting opportunity right here. Could have picked up the gold for the day right there. I didn't get filled. Then it gave another momentum short right here. Then it gave another short right there and there. No, the cycle was going up too steep. And finally, we grabbed this one here. We picked up 10 ticks on that. And along here, along here, along here, along here. You know, there's $400 right there. Easy. We picked up this one right here. There was another 10 ticks to put us at plus 20. Then we stopped out to the tick to put us back down to 12. Along there, along there, along there, along there. Gold it's trading so thin, so it's jumping all over the place. Right, there was a long there, a short there. We grabbed this one for 10 ticks to put us at plus 22. We grabbed this one, but I forgot I had it on, so I didn't take any profit when it got down here. I moved my stop to break even when I realized I had it on. And that was all that we did. That was all that we did with gold in the morning session. Okay, now it's not a strong trend, but it just had a bounce off the BBC right here. All right, now on the euro. The euro's trading more normal than any of the other markets, meaning it's really not given all that much opportunity. There was a short right here and a short right here, a short right here, and we grabbed this short, but I ended up getting a break even on it. Again, I had forgotten that I put it on, and I could have taken a lot of profit down here, but I ended up just throwing my stop at break even and letting it ride out. That was really it on the euro today. You know, during the break, there was a short right in here, right here. Put that leg down. It's starting to put another one together right now. Crude, we only had one trade in crude. It was right here. We took a break even on that one. There were other trades, but I didn't get filled. There was a long right there. Now, Crude's is trading really thin right now, too. It's kind of like gold. Gold is trading so thin. You know, it's got a spread, and sometimes crude has a spread as well. It kind of makes me not want to be part of those markets. But we have had a shorting opportunity right here in the crude. Another one there. Another one there. We weren't trending in here. We took a break even on this trade. We missed the long right there. And that was really it. Crude wasn't trading very well. I mean, this is the N contract. Now the M contract, you know, if you were to go here and look at this, this is the N contract. Now you see we have 303,000 in the N. If we bump it back to the M, there's 613,000. So it's, you know, we had to roll. They forced us to roll. Right, on the ES, I had a few trades on the ES today, and we ended up with +6. That was +2. That was break even. Hang on, it's loading up data for me. Now, the thing that was working really well with the ES today were the YBR trades. I will go over that in a few minutes. We had a +4 right here. We missed the follow-up. But if you have red on the YBR and you get a down close and you have bearish separation down here, that's usually going to work out really well. Okay. Well, those are our trades on the ES. I think it was 1 + 2, 1 + 4, and 2 break-evens. Okay. And that was our morning with the ES, actually with everything. Okay. And then go there, come back over here, bring this up. All right, so on the morning session, we're +22 on gold and +6 on the ES. That put us at +$295 a contract this morning. Today it took 28 minutes and 1 trade to get to $100 a contract, and we took a total of 11 trades. On the month, now we're at $7,951. That's over 19 days, averaging $418 per day. On the year, we're at $29,925. That's over 77 days, averaging $388. Now that is 1 contract, 2 hours per day. And as you can see, I missed most of the trades. If you have not taken the free trial with us, you can go directly here to eminitrainingschool.com, but there's more information here on our webpage, on our home site, cfrn.net. You go to free 5-day trial, and that will bring you here to eminitrainingschool.com. And all we ask for on this page is your name, email, and phone number. And you can fill this out if you want. Hit the send button, and you'll be sent a confirmation link. Okay, once you get the confirmation link, you must click on it, because we don't know that you took the free trial until you click on that confirmation link. Okay? Okay, and that's it. With that, we will pass it back out. Fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne must not be ready. But so we're really choppy here on the ES. We're really choppy here on crude. We're setting up a short right here on the euro. And it looks like gold is going to set up a short soon. I don't know, but that's what it looks like. Bring this back up. There must be something that I am missing in the emails. Andrew, okay, I will take care of that. All right. Does anybody have any questions about anything? Right now, while we wait for Dwayne to come back, is a good chance for you to ask me questions that I can answer directly. Okay, and Val, I'll take care of Andrew.
Appreciate that. And if you'll give me a respond about Dennis, I can get that out too.
Just mentoring. That's all.
Got it. Thank you.
Okay. All right. Charles, could I point out other trades and system to accumulate points? I can. I don't want to confuse you, but I can. We have other trade setups, and I mean, right now the simplest thing with the markets the way that they are is the YBR trade. Okay, because all you're looking for is separation down here in the slingshot, color, and a down close to go with the color. Now this was not a trade, but let's go to the ES because the ES was having some good ones today. Hang on. Here we go. Now, what you want to have, bullish separation down here in the slingshot. That means the cycle is going to be above the green line. You have the color and the up close to go with it. Okay. See, the ES was having more of them than other markets today. Blue up close. Let's scroll back and we'll look at a few more for you. Now, there's the 137 trades, the 128 trades, the 164 trades. Those are other trades, but I have, many videos about those. So if you're interested in those trades, I can just direct you to the other trades. Well, you can go to cfrn.net/emini-Tuesday and see some of those other trades, Charles. Okay, but the YBR trade, it was hitting pretty regularly this morning. I'm trying to scroll right now, but it's just not letting.
I just want to let you know I'm back in case I missed my call.
Okay, yeah, you did, but I'm just answering.
Sorry. Okay, yeah, no, take your time. Take your time.
Yeah, if you go to cfrn.net/emini-Tuesday, there's a bunch of videos there. And I mean, the videos are probably a year old now. I was doing them every Tuesday for a while, every Tuesday afternoon at 1:15. But then somebody said, all those videos say the same thing. And it's true. It's true. The YBR trade's not in there, though. And with the YBR, what you want to have is the right kind of separation between the cycle and the green line down here. And you want to have the color on the YBR with the up close. Okay. And
what Michael just said is a really important thing. Everybody should let that sink in. There's all these videos at that link he just gave you. But as someone commented, well, it's just the same thing over and over, week after week. When you find something that works, there's no need to fix it. No need to change it. No need to go searching for something different. A definable edge is as good as it gets. And we've seen people over the years who had a definable edge. And it's like, your favorite hunting knife. It's got a nice sharp edge, but, for whatever reason, you want to put an edge on the edge and you keep trying to put an edge on that edge. And then pretty soon you're just left holding the handle. And not only is the edge gone, the whole blade's gone. Back to square one.
That's right.
What did I do wrong? Well, you didn't leave well enough alone. Just because you get stopped out doesn't mean your method's not working or your strategy or your indicators, because getting stopped out is as much a part of trading as breathing is a part of life.
That's the link, Jack. Okay, and I'm going to take care of Andrew right now, Valerie. Yeah, you can take the charts back if you want, Dwayne. I'm all set.
You're all done? Okay.
Yeah.
Okay, I did talk to John, and he is feeling a little better. He was taking a little bit of a rest, and so we decided that we would, that he would try to, he's going to rest a little bit more, and then he's going to try to come on at the top of the hour at 1 o'clock. Okay. So we'll be looking for him to join us at that point.
Okay. Oops.
And to our new partners, passport holders, members of late, I haven't personally welcomed you to the family yet. Let this be my official welcome to the family.
Yes, welcome.
Okie doke. All right. So the recap of the recap was
today it took 28 minutes and 1 trade to get to the goal for the day. At that point, I was up $100 per contract.
Good job.
Thank you.
So I already showed you guys a screenshot of the Concierge Trade Alerts that were issued last night shortly after the Globex Open. I try to get them out each evening as soon as I can after the Globex Open. If there's something unusual in the market, sometimes it might be a little bit later, but I do try to get them out every evening, no later than 9 p.m. Eastern. Those alerts, those opportunities are based on historical price behavior. The other alerts that we have are called the Logic 247. Logic because the secret sauce, if you will, it's not really secret and it's not really sauce. It's just based on logic. The way we see the markets, the way we understand the markets, the way we think about the markets, to us, it's just logical that this would be the next thing to happen based not on historical price action, but on current price action. So we've got one set of alerts looking at historical price behavior, Concierge, and then we have the Logic 247 alerts looking at current price action. Now, those can be used and traded individually, apart from each other, but there will be times, quite often, when you'll see Concierge and Logic both pointing a finger at the same important price, important area, important opportunity. When that happens, when you've got a trade set up based on historical price action, current price action, that's almost always a call to pause, take a closer look, go to your charts, because those turn out to be quite often some of our very best trading opportunities. So I showed you the Concierge alerts that were issued last evening. Now on the Logic alerts, Valerie goes through the channel and she does a recap of those. The criteria for me posting an alert in the Logic channel is whenever opportunity presents itself. That's the criteria. And we'll go through those individually, but for the week so far, now this is just the Logic alerts, okay? As of 12:20 p.m. today, we've had a total of 25 alerts. We start Sunday night, 6 p.m. Eastern, when the market's open, and then the Logic channel is open around the clock. That's the 247 part, 24/7, right up until Friday afternoon at 5 p.m. Eastern. You could get an alert at 2 a.m. or 2 p.m. It's dictated by whenever opportunity presents itself. Okay. So out of the 25 alerts, 3 we're still waiting on a disposition, 22 actionable alerts, 19 of them made it to their final target. 1 of them made it to at least the initial target. And if there's only one target for that alert, then it had to go 60% of the distance or better to qualify as a PT. 2 were stopped out. So 9% of actionable alerts stopped out with logic 247. Now, in the live training room, Michael uses a range chart to teach you our method, to teach you our strategy. It's a little fast-paced, and we use that chart for a number of reasons. One of them is that by using the faster chart, you're able to see the trade setup multiple times during each daily 2-hour class. If he were using a larger time frame, like a 30-minute during those 2 hours, some days you might only see, one opportunity or 2. Some days you might not even see any. So that's just one of the reasons why we use that faster time frame. For the alerts, my go-to chart is a 30-minute. In the room in the morning, as you're learning, we risk 8 ticks on every trade, every market. 8-tick hard stop. The focus in the morning is to teach you the trade setup. It's also teaching you that you must have a physical hard stop on every trade, because if you don't, then, well, that's just gambling, right? The idea here is to not be a gambler, but to understand what the market is telling you and to understand what the next high probability move is. No one can tell the future with certainty. God chose not to create the universe that way. When he created Adam, he put lots of good stuff into Adam, but 2 things he didn't give Adam was the ability to change the past or to know the future. Those 2 things are inextricably linked for eternity. Now, there's a lot of websites out there in the trading world that have very clever ad copy that would kind of lead you to believe that those folks have somehow managed to outfox God, and they can actually tell the future as though they had crystal balls of some kind. Well, that's misleading, okay? So while it's not possible to know the future, through the use of the brain God gave us and the strategy that we've built over the years, now this is a 15-year work. Michael and I first met in 2006. We both had been trading, prior to that. We haven't changed any of the rules to our method or a line of code in the indicators for, I think, about 7 years now, maybe 8. Again, that's back to, if something's not broken, don't meddle with it. Just keep on trucking. So with that said, you understand there's the concierge alert, there's the logic alerts. Now, that doesn't mean that you can't go in and find your own trade setups, because you can. The whole purpose of what we do is to teach you how to do what we do. Of course, in the beginning, you're going to follow Michael in the room in the morning, and the alerts that come through the private Telegram channel to you, you'll use those. But as you spend time with us, as you learn our method, learn our strategy, learn how to read the indicators, then you start to see the market the way we see it, think about it the way we think about it. So you'll reach a point in your journey with us where when your phone or your computer or your tablet makes that little telegram sound, dee, 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 that's my best imitation of the sound. It's not that good, but it's all I got. It will serve more as a confirmation to what you already saw. Again, in the beginning, it's actually an alert. It's a wake-up call. Hey, go look at the chart. But down the road, it just becomes a confirmation of what you've already seen with your own eyes, because we do the same thing over and over on every trade, on every market, and on every time frame. Everything we do is fluid across all markets and all time frames. There's one other part of the equation that I haven't talked about yet today, and that's the weekly trading zones. Those are published every Monday morning at 6:15 a.m. Eastern. We've been publishing the zones since December 14th of 2009. Once we publish those on Monday, they're carved in stone for the whole week. We don't change them, massage them, manipulate them. Again, carved in stone. And what they do is they create a framework. When price gets above a weekly trading zone and holds a pullback to that trading zone, well, then what we see is the market telling us that it's now going to try to get to that next zone above. If price trades below a weekly trading zone and holds any pullback, then that's the market telling us that it's going to try and get to that weekly trading zone below. So let's go to a 30-minute chart. That's my go-to chart. Now, that number that you see up on the screen, that is last week's weekly trading zone. Partners get the zones Monday morning, 6:15 a.m. Eastern. I tend to share the zones with the entire audience of this program on Thursday, and it's usually worth jotting them down, because as you can see, here we are at Tuesday already, but yet last week's trading zone did exactly what we would expect it to do. When price approaches from below, we expect it to be good resistance, and it was. Now, this was yesterday. Actually, this was Sunday night, the 26th, and then the 27th, this was about 1 a.m. Eastern, we hit that weekly zone from last week. It held as resistance. Price pulled back, and that's how markets work. You get a leg and a retracement and a leg and a retracement and a leg. So we had good resistance, good resistance, good resistance. On this one, we closed above that weekly trading zone, and we took out that swing high. Now, this candle, just the swing high on that candle was 64.75, and then price just began to work its way up. Another important thing happened here. We pulled back to the BBC, which we expect to be good support, but we had red and falling overhead, which is potential resistance. So when price closed above the weekly trading zone, it also turned red and sideways into blue and climbing, and that's bullish. So again, when we're above the BBC, we anticipate higher prices until price gets below the BBC, and then we anticipate lower prices. And when you see these little squares like this, I call those windows of opportunity, okay? In other words, like last night, if in the Telegram discussion group, if you've been following along in there, and if you're on the trial, you really should be following along, because you'll see stuff there that you don't see in the alert channel, because the alert channel is just the alerts. So I will put these windows of opportunity in the discussion group to kind of help you visually see what I'm looking for in the alert. So price fulfilled that window of opportunity. And then here it attempted to fill the next window, didn't quite get all the way to the top. It put in a swing high at 81.25. Okay, so then price pulled back. We had another window of opportunity, and that one got filled on this candle right here. Price just traded up, entered the window, and cruised right through it. Price has now pulled back to that weekly trading zone from last week. Price has also gotten below the BBC. So now we're actually looking for lower prices. So you'll notice once we close below the BBC, Michael, do you know if this was a news-driven move?
We did have news today. We did have some high-impact news.
This happened at 10:30, so I'm just wondering if...
No, like 10:30. No.
It just happened.
Yep, it just happened.
Now, as price pulls back to the BBC, we expect that to be good support until it isn't. So that's why when we pull back to the BBC, we don't just automatically go long. We wait for, like over here, when price pulled back to the BBC, we don't just automatically go long on this red candle. We wait for this green candle to start building. Okay, that shows us that the market has pulled back, found support, and is now going to attempt to move higher up to where we expect there to be good resistance, which would be that weekly zone overhead. And that's where we found good resistance. So let's walk through the Concierge Trade Alerts real quick. I already gave you a screenshot. If you didn't get the screenshot, here's one more opportunity to just grab it real quick. These are the ones based on historical price behavior. It said to consider being long at 28.75. So on this chart, we go find 28.75. Which is right there. Okay, so the CTA by 28.75. You should always trade in SIM till you become consistently profitable. If you become a CFRN family member, you'll get a blueprint. The blueprint wants you to put together 10 consecutive days in a row in SIM where you reach your goal in 10 trades or less. Once that happens, you get the green light to go live with just one contract. We want you to use that one contract to increase your account balance by $2,000. And then you get the green light to add a second contract. The beautiful part of that is your first contract had to come from your savings, but the second contract, that is underwritten by profit you earned in the market. That's a big day. Hip, hip, hooray. Because you're now building a successful trading business. That's your first step. And going forward, when the blueprint says it's time to add number 3 or 4 or 5, it will always be done with profit you earned in the market. If you don't have profit you earned in the market, then of course you're not going to be adding any additional contracts. Now, once you go live, if you have 2 days back to back where you don't reach your goal in 10 trades or less, you come out of live, you go back to the simulator. That's not a walk of shame. That's the sign of a smart businessman. You book a mentoring session with myself or with Michael or with both of us. And that's all included. You have access to unlimited one-on-one mentoring sessions with us. So you go back to Sim, you book a mentoring session, and then we'll walk through those 2 days with you, trade by trade, and we'll troubleshoot each one. Just like in school, you learn how to diagram a sentence. We'll diagram a trade. to determine if it's something you missed, something you didn't quite understand, or maybe it wasn't even your fault. Sometimes, out of nowhere, for no apparent reason, price will simply change direction and go the other way. So getting stopped out's never fun, but it's just part of the business. It's much a part of trading as breathing is a part of life. The big difference here is when you get stopped out using our methodology, our strategy, we're going to help you understand why you got stopped out. And when you understand why you got stopped out, it's still an unprofitable trade, but it takes the sting out of it, and it removes that dark cloud that accompanies being stopped out, because, well, you understand what happened. It's, as Spock would say, completely logical. So once we troubleshoot those trades, once we fix anything that needs fixing, you should probably spend another day or two in SEM, get your confidence back. And if you were on, you were on contract number 3 or 4 or 5, when you hit your rough patch, when you go live again, you will start back out where you left off. You don't have to go back to SEM, and get another 10 days in a row, or you don't have to go back to, the one contract. No, you just pick up right where you left off. Okay, so from 28.75 up to the swing high at 29.13, I'll do some math, and I will use a calculator. 29.13
John just
minus, okay, 28.75. That's 38 S&P points times $50 per point. That's $1,900 per contract traded. That's what the market made available. The market does the heavy lifting. We don't. We do our best to point you in the right direction, okay? And we have a little thing called an exit signal, and I'll go over that in detail in just a bit. Right now, we're going to talk with John, and after we talk to John, I'll pick up right where I left off on the recap. Welcome to the show, John.
Hi there. Good to be back. Thanks very much.
Oh, man, it's so good to have you back, and I do hope this means that you're feeling better.
Yeah, no, it is. Thanks for asking. So, a few things actually, for the benefit of everybody, because so a lot of people may or may not know this, but we've been talking about this since the beginning, which is the agony and the what's the word? I guess the suddenness with which this can hit people and can overwhelm them. As a matter of fact, a friend of mine called me a few days ago, and a very good friend of his just went up to this northwest area, Seattle, and he went to see his brother. He caught the virus, and he died the next day. I mean, can you believe it?
Oh my goodness! Yeah, I didn't realize it could move that fast. I guess, did he have a compromised immune system, or did he have, what do they call that?
Well, I'm going to get to that in a minute to explain it, because a lot of people may not realize this, but when you understand it, it's very logical, and it is definitely a way to defend against it. As I've said many times on the show, what's happening to a lot of, whether it's New York cops or even health workers, and obviously the people in the nursing homes and the more vulnerable, is that this thing is getting into them, and they probably don't even know it. And before they know it, it's almost too late. And I'll explain how that happens in a minute. But I can tell you, it's very scary, because, I mean, look, nobody can tell whether you're going to be asymptomatic. As you know, this very famous doctor that we had access to the information, he said back in January, I think I said it on the show, he was estimating 60 to 80 million people would become infected in the U.S. he's turned out to be right, because we've already said this thing could be going through the air like pollen. Could be. So you almost, no matter what you do, you could get hit by it. Now, when it goes through the air like pollen, maybe the viral load is not enough to get into people, which is why there's a lot of asymptomatic cases. Where people are getting, if somebody sneezes on you and they're heavily infected, your chances of surviving might go down a lot. So and there's also different strains. The best news is, the good news, look, remember I said 100,000 recoveries a week? We're actually doing better than that. We're almost up to 1 million recoveries. And if the Chinese had stopped lying and give us the real number, which is about 4 million cases and about 200,000 dead, I think they said it's about 50 times the real number. The fact of the matter is there'd be, 3.8 million recoveries today, something like that, or maybe 3.6. So, but this funny thing is, if for some reason the UK is not updating their recoveries, they're maybe using a different way, but I think Germany's approaching 200,000. They've got about 100,000 recoveries. So the recoveries are really sort of gathering pace. The best news is when you look at the daily cases, almost, the global daily cases is definitely turning down. And some places like Luxembourg we looked at, which was very virulent about 3 or 4 weeks ago, is almost, to zero in new cases now. So there's a lot of countries that are actually, quite under control, remarkably. And this Israeli mathematician who basically predicted that this thing would run itself out after 70 days, it's right on. It appears to be running itself out. Now, going back to the infection rate, New York City is probably the definition of his prediction coming true. In other words, they estimated that 1/5 of the population in New York City were infected by this, and 1/5 of the population in the US is somewhere between 60 and 80 million. So he was right on with this estimate. And at the end of the day, it's probably going to end up proving to be not quite that number, but certainly, and maybe in the tens of millions in the population.
Wow.
And the thing is, the more people are infected, the virus runs out of new targets, if you like. The way this thing is tending to turn down.
Yeah, I heard someone talk about something this morning in some interview that once, what you just said, once everybody's, infected, whether your body resists it or not, then it has nowhere to go. And
exactly.
It burns itself out.
That's exactly what's happening. And this mathematician, he says, look, it's he's done the math on it, and he said you can't dispute the numbers. It's happening. And look at China. China was, even though the numbers may be 50 times worse, it lasted a certain amount of time, and I think they had 0 new cases today in Wuhan and other places. Oh, really? Okay. So, and I think they discharged the last 12 patients yesterday. So that's remarkable in itself.
If only we could trust those numbers.
Right. And then the other thing is that, Korea is exemplary in their control of it. Korea is a classic, up to the peak and down to the valley. And now we look at Luxembourg.
You're talking South Korea, John?
Yeah, South Korea, and all the other places. Thailand is very interesting. Mexico has actually done a pretty good job. They're actually in a kind of still in a pretty strong uptrend, although it's topping a little bit. But they've gone very rapidly from about 1,000 to about 19,000. But they've had 10,000 recoveries. A very, very fast recovery rate. It's amazing. Probably one of the fastest recovery rates in the world.
I've got a screenshot up right now of Mexico. I just searched Mexico COVID numbers, and
did drop off there in the last few days, right?
Yep. The peak looks like 1,239. And then today we got a number of 852.
But they had a pretty strong spike up there, you know, from.
Yeah, this move here from April 20th to April 24th. That was the big push. Yeah.
Okay, so here's the thing. Look, what's come to light is the virus. You know, the virus, whether it sweeps through the air or however you get infected, it goes from asymptomatic, so no symptoms at all, to mild colds, you know, moderate cold, severe cold, etc. You know, those kinds of symptoms. But if it gets in the lungs, and you know, you just don't know this because it's a silent killer. And the modality of this virus it's hypoxia, which is a lack of oxygen. Because as soon as it gets into, you know, how many times you heard me say the thing that I fear most, and everybody should fear most, is this thing getting in the lungs and doing not just damage to your lungs, but potentially permanent damage to the lungs. So what it does is, if it gets a hold of your lungs, it degrades your lung capacity very, you know, over either days, or in the case of people who are dying in 24 hours, over hours, right? So so you can go out and get a blood meter thing that goes on your finger, and you can monitor your oxygen level in the blood.
And what do they call that little device?
Oximeter.
Oximeter. Okay.
Now, if this is probably better than temperature, and you know, if they'd been using these oximeters, they only take a few seconds to give you the result. They might have been able to control this thing a whole lot better, because the thing is that the oximeter, if your oxygen level starts going down, right? How much is that one? 50% off. How much is that?
Let's see. Let's go shop now.
Yeah, they're pretty cheap. You know,
buy 6, get 1 free.
Yeah,
$69. Here's a wireless one for $35.
Yeah, there's a new one that just got approved by the FDA. We're talking about on Fox News, and this one can hook up to your phone and it'll alert you if your blood level goes down, or it'll even alert your doctor. So, but here's the thing, what's going on, the reason, remember we talked about how the poor people are showing up at the hospital and it's almost too late. So the thing is, they don't know, most people don't realize how badly they're infected until they suddenly think, I got to go to the hospital. Because the blood, by that time, the oxygen level's down to 50%. And the brain doesn't get affected as much as the heart or the kidneys or the liver or other organs. The brain is able to sort of acclimatize to the lower oxygen level as if you were climbing a mountain, you know what I mean? So by the time they get to the hospital, if you've got heart problems, if you're diabetic, or if you're overweight or something, you're in danger of going down, because your organs could fail at any minute. Once you get to 50% oxygen, it's really critical, because your organs aren't getting enough oxygen.
Gotcha.
So I would recommend, there's a couple of special deals out there on oxygen gene machines that generate oxygen. I think you can get them as low as 200, approved by the FDA.
Okay, tell me what do you call the device?
Oxygen machine, or oxygen generator.
Oxygen concentrator, oxygen
generator, I'd say, probably.
Oxygen generator.
But as a general rule, it doesn't hurt to have one of these around, even if you have a heart attack or something.
Yeah, I've seen folks out and about.
Yeah.
No, that
because
was
if you
$2,000, and the one next to it.
If you detect your oxygen level going down, you can compensate with one of these things until you get to the hospital. You got a much better chance of survival if that's the case.
So it looks like you can get one of these for as little, John, as $185.
Yeah, yeah.
Let's take a peek at it. Okay, what does it do? Concentrations up to 90%. The flow can be adjusted. Excellent filtering, intelligent control. Mat, bacteria filter, remote control operation. Convenient to carry. It's got a timer. Inhalation, ear type inhalation. I'm gathering that means something other than they're not pushing oxygen into your ear, are they?
No, I think it's probably the things that they're just a simple thing that goes in your nose, you know.
Yeah. Okay. So let's go back to a picture of it. Blow up. Well, there it is, right there. So, yeah, for $200, I'll never forget the first time. This is many years ago. I'm talking probably back in the 80s. It was lunch. The place I worked, there was a little pub across the street, and they made great sandwiches, and so people would go there for lunch. And I'm sitting there one day having my lunch at the bar. This gentleman comes in and sits down right next to me, and he's got one of these little portable oxygen tanks like we saw on one of these previous, like this lady has right here. It was similar to that. He orders his drink. He sets the little canister up on the bar, and then he pulls out a cigarette and lights it. And I'm like, whoa. I grabbed my plate of food and I moved all the way to the far side of the bar. And I can't remember now, but I don't know if the barkeep made him put the cigarette out or not. But folks, if you're using oxygen, is highly flammable. So, I mean, that guy was like a ticking time bomb. Anyway, back to you.
Yeah. Well, going to the markets, you know, we've had a pretty spectacular rally up until today. Now the Dow is still positive, and S&P.
Here's the Dow.
Things. But
here's what's interesting on the daily, John. We've hit this resistance area that lines up with this area here. I'm thinking we could get a pullback here in the S&P to around 2760.
Yeah, if you put up the NASDAQ, you'll probably see that there's more of a head and shoulders kind of a bottom developing.
Okay, all right, let me do that.
We've got one of the things that's going on today, and we can look at it in a minute after this, is the mid caps are really on fire today. Today and yesterday, they've been breaking out actually, which actually is a pretty good sign.
Okay. Here's the NQ.
Do you see the head and shoulders there? No, we've got an outside day on the NASDAQ, which is a bit of a problem. But
are you referring to this head and shoulders, this reverse head and shoulders here, John?
Yeah, it kind of depends. You know, what I think might happen, even though we're in a kind of a negative stance here right now with the NASDAQ being down about 100 and everything else is up, that's usually not a very good formula for the future, but it can reverse itself, because I think we've got some reporting tonight, Facebook and a few other things. So if they sort of turn the market up, the NASDAQ up, it probably means we're going to break out here going into May. And if you remember a while ago, I said that when you have a strong April, and we've got one of the strongest Aprils ever, it has a tendency to morph. It has a tendency to morph into May and be strong again. And the thing is, you know, with all this opening up of the country right now, it's kind of good news. So the market really since March the 23rd, 4th, the market's just been getting better and better news all the way up, you know, and it's continuing to do so. And as business recovers, probably, you know, there's probably another leg to go on the upside. If we, you know, if the news that comes out on these stocks is not too negative. And,
who do we have
if it is
reporting
negative,
after the bell today? Do you know?
You know, even if it is negative, there's a chance that the market will just brush it off and just keep going higher, because remember, I mean, even Kudlow said this morning, we put $10 trillion in stimulus. There's never been anything like that, and it is just unbelievably bullish for the markets. There's no ifs, ands, or buts about it, and I think it's very likely. I mean, there's all these doom and gloomers and these people who just spend so much time wasting time talking about, oh, you know, it's never going to be the same again. I'm telling you, listen, it's the same after 9/11. You know, in 6 months to a year after, you know, life was back to normal, and I have no doubt it will be the same. And I'm not a big believer in the second wave of this particular virus, to be honest with you. I think this thing is going to run its course, and it potentially could disappear forever, you know, after a good hot summer. Hopefully it won't come back in the fall. But if it doesn't, I think the economy could be growing at 10% in the fourth quarter, maybe even more. So I think we're going to see an unbelievable end of year blow off in markets, including the gold and silver, which thanks to Bank of America. Remember what our forecast was at the beginning of the year? I said as much could go as high as 3,400. I said that back in January. It's not looking like such an extreme forecast anymore.
And that was Bank of America.
Yeah,
is that
come up with a $3,000 price target, saying that the Fed can't print gold, and so
no, that's true.
They're raising their target. Now, I'm in the middle of writing this report. I don't have it quite finished yet, but it's really you know, it's a pretty big deal. It's going back 100 years. It just makes the case for gold, and I actually believe. Look, the most stunning visual, if you like, is, remember when they started doing all those repos back in September?
Mm-hmm. Yes.
You know, we had the big, you know, impetus of stimulus in 2008, 2009. What was the result of that? Basically, gold tripled, right?
Right.
So it went from 700 up to 1900. And this time, are you ready for this? The repos and the stimulus is more than double what they did in 2009. It's possibly even a triple. So,
wow.
Think about this. If the same amount of stimulus of 2009 could triple the gold price from here, and we're doing double it already, I mean, arguably the gold price could go to like $10,000, let alone $5,000. But I think 5,400, you know, 5,000, 5,400, 5,500 is not a stretch anymore for the gold market in the next 18 months or so. And it could actually have a big run up. I actually think we're going to have a run up into the end of the year. Then we might have a pullback next year, but I think there's going to be a final run in the gold 23, 24 that could really take us, you know, substantially higher. You know, maybe into the somewhere between 8 and 12,000 can't be ruled out, because this look, the deficit right now is 25, or the debt rather is 25 trillion. Today, it's not going to stay there. It's probably going to end up being 26, 27, 28 before the end of the year. It's going to probably be 30 by 21. in the 2024, the projections on the U.S. debt clock, it's already at 41 trillion for 2024. So it's hard. It's almost 41 trillion virtually means a $4,000 gold price is highly likely. So look, if that's as high as gold goes between now and 2024, it's fine by me. If you're long gold. But it could be much worse because there may be more stimulus to come. There may be another 5 trillion stimulus before the election. And I think there's a second hit coming in a year or two, and that's probably going to take more stimulus again. So, what this virus has done is it's taken a wrecking ball to any kind of control of spending and debt for the foreseeable future. Period. I mean, it's just there's no you can't even there's no measure against the past anymore. It's totally off the charts what's going on here, and it's probably going to have consequences in terms of much higher gold prices down the road.
Well, if we look at this, I've got a daily chart up of gold right now. So reverse head and shoulders, head, shoulder, shoulder, neckline. If we do a measured move, that puts us up around 1950.
I think that's perfect. I think that's exactly where we're going, actually. And look, I think the way it's consolidating there right now on the right, see that little doji? It's possible we may have made the lows already. I wouldn't rule out a trip down to 1675, somewhere like that. One more and then go from there, but it may or may not do that. But it's interesting that when Eddie Ordini came out with this 3,000, it's just the same as when Ray Dalio came out with the 2,000. The market went south first before it went up, and in that big dip in March. We're getting a dip now after not Ordini, sorry, Bank of America. But I think beyond this, you can almost see a case for a near vertical up move right up to that 1950 area, possibly even breaking above into 2100 or so. I think if it gets to 2100, we might be in a range in the summer between 1900 and 2100. And then potentially into the fall, we could be heading for 2400 to 3000, maybe even 3500, 3400.
On the daily, John, these fib extensions from this low to this high to this retracement low, here's 100% price extension, and here's the 161.8, the golden number as they call it, and that's at 2000.
Yeah. It kind of looks very likely.
It does. It really does.
Yeah. And of course, remember, gold is making all-time highs in almost every currency. And
there was a question for you that someone had sent in earlier today before the show. So let me bring that up real quick. Okay. Would like to hear from John on this if he comes on the radio show today and is feeling better. It's from Zero Hedge. Physical gold premiums soared to the highest since the Crimean conflict as Congressman questions COMEX. So let's just go to the article.
Well, actually, Dwayne, there's an interesting hypothesis, which is in the same way that the crude broke down because of delivery issues and went negative, the gold, because of delivery problems and the mining, some of the gold, there was a lot of, the refining is all shut down and everything. So there may be some delivery issues relating to COMEX, And
but look, it says they're producing as many kilobars as we can. We're probably churning out 7.5 tons of them a week at the moment, and we're already forward sold well into May, according to the CEO at the person.
Well, that's the whole thing. So if somebody doesn't have the gold to deliver to the COMEX, then there's a possibility they might get caught short, if you like, in the same way as. And listen, there's apparently there's a bank that's massively short the gold, and some of the commercials are short. So there's a very
Jamie
good chance.
Dimon and his crew, I think they're short, especially
There's
silver.
a very good chance of a massive short covering blow up that would take us up to that 1900, 2100 level.
Mm-hmm.
So it kind of feels like it's going to happen. Oh, by the way, if you could pull up IMMU, Dwayne.
Mm-hmm. I will.
You may remember I mentioned this stock a while back when it had that, to put the daily up.
There we go.
Okay, by the way, not every, just like you don't want to believe everything you read in the papers, everybody sort of thinks that Goldman Sachs is the be all and end all when it comes to knowing what's going on in markets.
Mm-hmm.
Well, see that breakdown before the big jump.
This
right?
one?
Yeah.
Mm-hmm.
I believe they downgraded the stock that day to a sell.
Yeah, to those who don't know, when analysts downgrade a stock, that's usually a pretty good buying opportunity. Of course, you got to do your own due diligence, and not every case is the same. And yeah, analysts have a great knack of calling
there's
tops
an
and
old rule in
bottoms
life,
the wrong direction.
It used to work very well for the futures traders. If you ever got caught short, or you get caught on the wrong side of a position, very often the smartest thing to do is just sort of shut your eyes and reverse.
Mm-hmm.
And it's really kind of negligent that this analyst, whoever he is, didn't get the memo when this thing jumped 100% in one day, and he never reversed his position back to a long. If he had, look how much he would have made by reversing his position, right?
Mm-hmm.
So as we basically recommended this thing, or sort of mentioned it was a pretty interesting trade because we compared it to Intercept, just to refresh everybody's memory. Intercept was $50 one day back in 14, and it finished the day at about 65. Generally speaking, you'd probably, if you're an aggressive trader, you would want to be buying a move like that, right? So, and then see it here, it was moving up. Oh, sorry, that's this year. Sorry, back in 2014.
In 2014, okay.
Yeah. Anyway, so it closed, up from 50 to 65. That was a pretty big deal, right? Then the next day, or that evening, it was up $100 after hours, the stock, right?
Wow.
Up $100. And it went up to $500, $450 or so. So, and then eventually went down. IMMU is a minor version of that. Okay, in other words, it hasn't been as dramatic a deal as Intercept, but they did stop the study, and that was what they did with Intercept. They stopped the study for the first time in history because the real medicine was working so well. It wasn't fair to the people who were on the placebo. That's what really pushed the stock through the roof. So when you look at IMMU, the same thing happened, and it's actually, performing quite well. It's kind of a tough thing to trade because it's sort of it's been all over the place, but it's made a new all-time high. So it's certainly has been a good trade. And if you remember, like 8 weeks ago, I went through this in detail for everybody's benefit. If you want to put up GILD.
Gilead. Yeah, that was. I think you were out the day that those. I think you were out the day that we had that big sell-off.
Okay, if you go to a daily, Okay, the day in question, so what I said was I had a feeling that if they interrupted the study and that the stock might jump, so I recommended if people were, should consider call options. Some people took my advice and they actually did very well off this trade. Then they came out with this news on that big down day.
Right.
It was a Chinese study. Personally, I think it's a stitch job because, look, I wasn't that struck on the results of the study, to be honest with you, even compared.
Well, it was a thin study. It was a study out of China, and
no, the first one was out of Chicago.
Okay.
And that was where they, and these were very sick people, mostly who recovered. So it was quite a good result.
But the day it fell apart, and they got leaked.
But look, the Chinese have been trying to rip off this formula patent, and it's very suspicious what they did. And I actually think this stock has the potential to go higher again, especially if they do it. They're in another study, so if that study came in and it's good news, I think the stock will actually run up to about 130. It's still in a kind of an uptrend, as you can see, unless it sort of breaks 76. I think it probably is in pretty good shape. The stock
yeah,
still.
definitely could draw a little trend line right across there.
Now the other one is INO.
INO.
We highlighted this quite a while back when it was about $4, but it's actually acting really well except for the last couple of days. I think it's going to consolidate here in this general area because they started the vaccine in April and there was a little bit of a pullback, and then it really had a very nice up move. I think if it doesn't pull back too much, below about 12 or so, the next leg could take it right up to 25 or higher. And I think this is actually, it's kind of the little engine that could. It's a real contender for potential rapid deployment of vaccine. If the vaccine trials they're doing work, I honestly wouldn't be surprised if the FDA approves this thing in record time. By the way, there's an interesting thing that you might have just read. They put together a kind of a Manhattan project, with various 20 or 30 people, just like the Manhattan Project, replicated it to deal with this COVID, like a COVID Manhattan Project. And they've got all kinds of very bright people involved in it to try and find a cure and do everything, whatever it takes to get rid of this virus ASAP, which I think is a very smart idea of Trump, probably. He's done a few things that are really remarkable, especially this testing. I mean, if you heard the conference yesterday, they basically reinvented the test. I mean, the rest of the world is like, a quantum leap behind where the US is, and this is why the tests are accelerating at a phenomenal rate right now, because they're actually getting better and better. They're coming out with new and better tests almost every day, and the tests are cheaper and faster and easier to administrate and probably safer. And they're absolutely, they really have done an incredible job, getting this thing ramped up. Okay, there was probably some delays and things, but I think with the benefit of hindsight, cutting through the bureaucracy, which was mainly the fault of the CDC and these other agencies putting roadblocks against the private testing labs. If they'd been kind of able to move at the pace they're moving now, a couple of months ago, the whole testing thing might have been accelerated a whole lot more. But in spite of that, they're still doing pretty well. My personal regrets look, even though they've been bashing the hydroxy everywhere, if you listen to Laura Ingraham, she did a very in-depth study about it last night, and it's look, as Trump said in one of his initial outbursts about this, you know, you want to die, or do you want to give yourself a chance of beating this thing? And I mean, you're kind of crazy. There's no question that this hydroxy has, if it's taken early enough, tends to minimize the infection rate. There's no question about it. It's absolutely definitive. I mean, this guy's treated thousands of patients who are swearing by it. So, and if you look at Malaysia, they're using it all over the place, and in the Dominican Republic. Look at the way the cases are going down in the Dominican Republic and the Malaysia and other places. They're using. I think they're using it in Australia. Australia has dodged a bullet. It's unbelievable the way Australia has managed to get out from under this thing, especially as it's going into winter down in Australia. It's incredible. You know, the Australians really did dodge a bullet with this thing.
Right. Well, with the U.S. moving into summer, I mean, that's supposed to be a big plus. This virus apparently can't survive in extreme heat, which bodes really well for Arizona, because we've already broken, I think we had a high of 105 yesterday. Alexa, what's the forecasted high temperature for today?
Today, expect a high of 101 degrees Fahrenheit.
101 today, so.
Yeah, and they're doing great in Florida too. You know, they really have done incredibly well in Florida. So the heat may be a factor. You know, it's so. Well, you know, we can breathe a little bit of a sigh of relief as to how things are going, but you know, it's still out there, and you have to be careful. So. Thanks very much for.
When you go out and about, do you wear a mask?
Absolutely, yeah. No, I wear gloves, mask, goggles, the whole thing. Yeah.
Good.
Yeah.
Good.
Okie doke. Well, listen, thanks.
Take care of yourself.
Okay, you too. All the best.
Glad you're feeling better.
Okay.
Talk to you soon. Okay. All right, guys. We'll go back to the recap we were working on. I'm just putting in an alert in the channel right now on the NQ, and we're going to look to sell 87.15, with a target of 87.05, initial target, and then the WTZ below that trade to target is 86.80. /8681. Okay. And let me put that here. Okay. All right. So now we'll go back to where we were and get rid of this daily gold chart for now. Now on the NQ, for those who maybe don't understand head and shoulders, this is what's called a reverse head and shoulder. And if you look at it enough times, you'll start to see it. Head, left shoulder, right shoulder. The typical head and shoulders would be the reverse with the head on top. And this is called the neckline. And so when you have a head and shoulders pattern, this is just basic technical analysis 101. This is not anything new, not anything we created. You measure the distance from the top of the head, which is not the circle I drew, but that swing low point right there. That's the top of the head. So you draw a line that reaches from the top of the head to the neckline. And the way the story goes, if price rallies up and breaks the neckline, you should anticipate a measured move. And a measured move is the distance from the top of the head to the neckline. So if we grab that little line we just drew and drag it up so that the line extends now from the neckline up, this is the measured move target. Now, we're not really pattern recognition people. It's not part of what we teach. But, you know, when you have an important, and this is considered one of the more important price patterns. When you have one that's just kind of staring at you and it's so obvious, it's worth not ignoring. Maybe you don't trade based on it, but you certainly want to be aware of it. Now, this is a daily chart. So can you get a head and shoulders on a 1 minute, a 5 minute, a 30 minute? Absolutely. But the larger the time frame that you have the pattern, any pattern on, the more important, the more relevant it should be. So on the NQ, this is a potential move from 9,000 up to 9,500. Okay, so that's 500 NQ points at $20 a point. That's a $10,000 per contract move. Now, if you've earned the right to trade 10 contracts, and I mean earned the right, the way the blueprint teaches. Remember, it's 10 days in sim, 10 consistently profitable days in sim. And you go live with one, increase your account balance by $2,000, and you add your second contract, and then the blueprint tells you when to add the third and when to add the fourth. And that's as long as things are going well. And going well means that you have the profit earned in your account to underwrite adding the next contract. So that's what I mean by earning the right. If you earned the right to trade 10 contracts, and when we break this neckline, if we do actually complete the measured move, which is, what did I say? From 9,000 to 9,500, it's 500 points at $20 a point. That's $10,000 per contract traded. If you've earned the right to trade 10 contracts, you can do the math. That's 100 grand. These are extraordinary times that we are experiencing right now. And, you know, while it's an extreme opportunity, opportunity and risk are opposite sides of the same coin. And so, number one, you have to certainly have enough money in your account to, you need to not only earn the right to trade a certain number of contracts, but then your account balance has to be such that you can handle the overnight margin on whatever it is you're trading. Because a move like this, you know, it's not going to happen in one day. It could take, well, it'll take however many days it takes, and it probably won't move in a straight line. There'll be up days and down days and rallies and pullbacks and nail-biting dips, edge of your seat rallies, that kind of thing. Okay. Now, on the way to the measured move target that I've highlighted, based purely on technical analysis 101, there's an obstacle to this trade. That price where the bearish cross took place, we'll call that, we'll call it 9,200. Okay. That is a very real obstacle. Doesn't mean price can't get through it. It very well may, but we'll most likely run into some resistance there, and price will most likely pull back looking for support. It might take a couple of runs at it before it actually moves through there. But once it gets on the other side of this potential resistance, it's kind of clear sailing up to that target. But even with clear sailing, you've got economic reports, scheduled economic reports that will be coming out. And we all know that news can come out of anywhere at any time, just like, was it last week or week before, when that news came out on Gilead in the middle of the session. We were looking at our 30-minute chart, and we're printing a green candle, and we were edging up to the weekly trading zone overhead, and then all of a sudden we weren't. I mean, the market just took a dive, a big dive, mid-session. In fact, for about 3 to 5 minutes, we were all scratching our head going, what happened? Because there was no scheduled news. The president hadn't sent out a tweet. And then 3 to 5 minutes later, the news started to scroll across my screen that the initial, the test for Gilead for their cure for this coronavirus flopped. And then we got more news later on that said, well, that information wasn't supposed to be posted. It was, quote unquote, an accident. Who knows? Many conspiracy theories swirl around that whole thing. But has Gilead recovered from that unthinkable? This was the day that it happened. And it has recovered as of yet. But as we can see, it's trying to. Okay. This was the day the bottom fell out. We put in a swing low down at 74.40. Price has managed to go from the swing low that day of 74.40 up to current price 79.61. So it looks like it's managed to recover about half, 50%. Okay. And that's just one more reason why you always must have a hard stop loss in place. A physical hard stop. Because this kind of thing not only can happen, it does happen. And the only way to protect yourself is by having a physical hard stop. Okay. All right. So back to the recap. Okay. So the NQ, well, let's go back to the S&P for a minute. The S&P, we had a long alert, Concierge to be long 28.75, ran up $1,900 per contract traded. Now the exit signal on this one is here. The exit signal cannot get you out at a swing high or swing low because, hey, nobody knows it's a swing high or swing low till after the fact. This was sort of an unusual candle compared to the others. But what you're looking for on a long move, you see how the step line is on the left side of blue and climbing, then it crosses over. And so you're looking for the first red candle on a long trade. You're looking for the first red candle that closes below the step line after it crosses over. So a more typical, close might have been up here around 29.04, but it closed all the way down at 28.92.75. So 70, that's still, more than 15 points at $50 a point. So still not a bad trade. But when you're in a trade and this starts to happen, you can exit the trade at any time. You can wait for the exit signal, or when you've given back more than you're comfortable giving back out of this profitable trade, then you can just exit at any point. Okay. In this case, price did a little pullback right here. So as price dropped through what we would hope would have been potential support, you know, you could consider exiting. But again, if you waited for the exit signal to completely develop and print the price of 28.9275, still had a profitable trade. And another part of the emotional side of trading is that whatever you quote unquote leave on the table, you've got to learn to shrug that off and not dwell on it. You do what you're supposed to do when you're supposed to do it, and the results are the results. You can literally drive yourself mad by all of the woulda, coulda, shouldas, all of that kind of stuff. So just a reminder, okay? All right. So we're pulling back up to the BBC. What's the next high probability move? Well, as price approaches that BBC, we expect it to be good resistance. The next high probability move would be a move back down, test this weekly trading zone and this obvious area of support right here. So do we put on a trade right now? No, because if buyers are serious, they could drive price just right on up. You know, if price pokes its head above the BBC, then right there, right where that bearish cross happened. So you've got an area here, a confluence. So you let price get up there, let it get rejected, right? And then as it starts to actually print a red candle, which could be the next candle, there's 6 minutes left in the life of this candle. So wait for the next candle, it starts printing red, or maybe we pull up so high that the next candle is printing on the north side of the BBC. So you want to be patient until you see a red candle building below the BBC. And then on a short trade, your target, your trade to target, be this area highlighted below. Okay. Now the short side of that Concierge Trade Alert, which I already gave you the screenshot of, in case you missed it, it's 28.50. This is what I recommend that all of our traders do each night when the weekly trading zones come out. Not the weekly trading zone, the Concierge Trade Alerts. Go to the chart that you trade, put 2 lines in the sand. Last night, the 2 lines in the sand would have been 28.75 and 28.50. We see that 28.75 has triggered. Now it's triggering again, okay? On this trigger, the chart supports you going long. You're climbing the back of blue and climbing, okay? But there's a different scenario here. Important prices, important areas are almost always tested. And most of our alerts will see them trigger multiple times per session. While this supports, the chart itself supports going long. This is why you should never just blindly trade an alert, but you should always go and check the chart, okay, to see if, because this alert came out last night at 7:25 p.m. Eastern. A lot changes in that much time. So 75, still a valid trigger, but you've got potential resistance right overhead. When you approach the BBC from below, you think resistance until proven otherwise. Then you've got the price where the bearish cross took place, resistance until proven otherwise. So going long here at 28.75, kind of be like driving into a brick wall. which could turn out to be a styrofoam brick wall, or it could turn out to be a real brick wall. So the best thing to do, now the BBC is currently at 28.79, okay? So if you triggered in at 75, well, I've got 4 points of room to run before I get to the potential resistance at 79. True. However, price doesn't always pull back to the BBC to the tick. Sometimes it does. Sometimes it, comes a little shy of getting there. Other times it will spike above it. And if you were going long at 75, if it did spike above it, well, that would be a good thing. It would be in your favor. But we don't want to use, we believe in hope. Hope's a very important thing to have in your life, but it's not a good trading strategy. You don't build a methodology on hope. Our methodology is built on logic, okay? So the logical thing to do here is to wait, see what's going to happen. If price can get above, right, then we would look for price to, as price moves up, we would then look for a pullback, because this BBC is going to curl up. If price continues higher, this will curl up, and as price pulls back into that BBC and finds support, then we've got a beautiful long opportunity, back up to this swing high. All right, so that's the S&P. We covered the Dow. Consider being long, 24,125. Ran up 310 points, $5 a point. So that's a $1,500 per contract move. Price then came back to the weekly trading zone where we expect it to be good support and to proven otherwise. Price has now bounced, just like the S&P, up to the BBC. And we're in the process of trying to print a red candle. It's doji status right now. So now the closer price gets to this zone, the higher the probability that it will actually get there. So a window of opportunity, it'd be a little something like that. Of course, price could continue falling as it did here, but that's just a little conservative window. I would want to be entering below the low of this candle, below the low of this candle, and that 24035 down to 24007. That's a nice trade. However, there's an issue, and that issue being we have a this week weekly trading zone, which all of our members got yesterday morning at 6:15 a.m. Eastern at exactly 24035. In fact, I'm just going to go ahead and scoot this up. 24035 slash 24040. Okay. So this window of opportunity, now that I've put the current weekly zone on, that changes the picture a little bit. If we weren't printing a green candle, which we are, if we're printing a red candle, then there'd be a window on the north side of that zone. But we're printing a green candle, so we're going to go up to the BBC again. We'll see what happens. One of two things will happen. We'll either find resistance and attempt to go back and test the zone, or we'll trade through it and the market will then try. The market is going to do one of two things. I absolutely positively guarantee, and there's very few absolutes in the world of trading. From here, price is going to attempt to take out this swing high or this swing low. We really don't care which it does. We just want to be a part of the journey. A good example of that I put this morning in the discussion group. And again, you really should be, if you're on the trial, you should be participating in the discussion group because you'll learn a lot in there. Okay. Now, here's what I put in the channel this morning. Gold is a great either or proposition. It will attempt to challenge the most recent swing high or swing low. We don't care which. We simply want to participate in the journey. I had two alerts right before I posted these two charts. I had two alerts. One alert was to be long gold at specific prices. The other was to hedge gold by also having a short position ready to go. Now, it's an either or proposition. Price is either going to make a run at this zone or it's going to make a run at this zone. It can go sideways for a while, but ultimately it's either going here or it's going here. Either or. And that's the path it chose. That's 8:42 a.m. Pacific, and by 8:57 a.m. Pacific, we had the answer. Okay, all right. Okay, so we've done the S&P, we've done the Dow. Let's go to Russell. On the Russell, last night's Concierge Trade Alert was so to be long 1292 and 1292. It's right here. Okay. CTA. Buy. 1292. The swing high was 1320.7. So that's a 28-point move. At $50 per point, that's what the Russell pays. It used to pay 100 a point, but nowadays it pays 50. 28 times 50. That's a $1,400 per contract move. And important prices, important areas are almost always tested. So price got back below the trigger, triggered again. This time it's managed to make its way up to 1309. So that's a 17-point move so far at $50 per point. Okay. Now the reverse side, the Russell, is to be short at 1258, and obviously we haven't encountered that price. So we'll go to the NQ. Last night on the NQ, consider being long at 88.75. Okay. 88.75. I should mention, if you're watching the show today for the first time, we record every show every day. We have for many years, and we archive them at youtube.com/CFRN. So you can go there and you can, scroll back a week or scroll back a month or scroll back a year, scroll back, year and a half, whatever, and check out Michael doing the recap and me doing the recap on the alerts. And you'll see that we're still using the same method, same strategy, same indicators. We use the same language. Everything's still based on the same principle. If something's not broken, we don't try to fix it. We don't try to put an edge on an edge on an edge. We feel very blessed to have the methodology and the strategy that we have, by the grace of God, put together over the last 15 years, although we haven't changed anything, and I think it's over 7 years now. We believe we're a blessed people living in a blessed time. And why God chose us to walk in this anointing, wow, that's a huge question that only He can answer. So, and I will ask Him someday. All right, the flip side, remember 2 lines in the sand on each alert. So the NQ, the other line in the sand, was 87.84. We had 2-sided action on the NQ. 87.84. All right, so CTA. Sell 87.84. Okay. And the swing low so far is 87.18. So 84 minus 18 is 66 points at $20 a point. That's $1,320 per contract traded. However, getting out at a swing low can only be done by accident or by luck, because you don't know it's a swing low or swing high till after the fact. This one printed a much more acceptable exit signal. On a short trade, the step line is going to be on the left side of red and falling. Steps over, steps down, steps over, steps down, steps over, steps up, steps over, steps over. So you're looking for the first green close above the step line. And so that closing price, 87.35. So that's still a 50-point move from the entry to the exit signal. It's 50 points at $20 a point. It's $1,000 per contract traded. Now price is working its way back up to the BBC and the trigger. Remember, important prices, important areas, almost always tested. So as we work our way up, we would look for this area to be good resistance until proven otherwise. And that good resistance, we anticipate to give us another leg to the downside to potentially test this swing low. Okay. All right, so we covered the S&P, the Dow, the Russell, the NQ, crude. Now, crude, we're in the merry old month of July because of all the volatility. Some brokers, last I heard, aren't even accepting orders for the front month, June. So Last night's alert for crude, consider being a long 1920. And we put in a swing high at 66. So that's $460 per contract traded. The short side was 1770. And that's going to be over here and over there. 1770. 1770, we put in a swing low at like basically 1730. It's a $400 per contract move. And we're staring at a double bottom. If the double bottom doesn't hold, then we look to the weekly trading zone below, which would be 1690/95. So is there a window of opportunity there? Absolutely. That's if support doesn't hold. We expect it to hold until it doesn't. How do we know if it doesn't hold? Because we take out the low of this candle, and in a perfect world, we get a little pullback to the BBC, perhaps on a smaller time frame, like a 5 minute, 1 minute. That pullback to the BBC holds, and then off we go, down to put in a new low. If this support ultimately does hold, then we would expect price to rally back up to BBC. We would expect the BBC to act as good resistance, and then we would look for another leg to the downside. Okay. All right, that's the story on crude. Here's gold. Last night's alert for gold was to consider being long 1732 or short 1719. Here's 1732. Ended up like to the tick. 1731.90. So we were one tick away from hitting that long trigger. That happens sometimes. And then the short side was 1719, which we find right. The alerts came out last night again at 7:25 p.m. So that's 1925 Eastern. So we go to the 1900 candle, which is this guy right here. And that's where we're going to draw our line at 1770. No, I'm sorry, at 1719. Okay, so 1719, the first trigger only took us down to 1717, but that's $200 per contract traded. Price got back above the trigger, and we dropped to 1711. That's $800 per contract traded. We tried to get back above the trigger, but the bears wouldn't have it, and they drove us all the way down to the weekly trading zone below at 1705/06. Price got back above the trigger, failed to trigger on the long side by 1 tick, came back down through 1719, took us to 1706. That's a $1,300 per contract move. And then we got back above the trigger, and we, on this candle, yeah, we dropped to 1718.1, 1718.5. Nothing to really write home about. But as you can see, as price rallied up to this weekly zone, we just had wide-ranging consolidation at the zone. And we just came up and tested. We tested the zone here. Resistance, came back to the BBC support. Back to the zone resistance. Back to the BBC support. We've got blue and climbing below us, but we're printing a red candle. So there's some sort of mixed information there. So there's no high probability opportunity that we want to discuss about, that we want to talk about at the moment. Okay. Now, that covers all the concierge trade alerts. On the logic, I'm going to encourage you to go to the channel and I want you to walk through each one of these trades. Like, here's an example on gold. Consider being short 1716 to 1715 to 1714. And then the final trade to target, weekly trading zone, 1705/1706. Okay. From 16 to 6, it's 10 points, $100 a point. It's $1,000 per contract traded. So on this one, you had the concierge trade alert telling you to consider being short at 1790. That's based on historical price action. Then you had a Logic 247 alert telling you to consider being short at 1716. That's current price action. So both of those are pointing their finger not at the exact same price, but at the exact same area. Important prices, important areas are almost always tested. And when you find, now again, concierge can be traded standalone, logic can be traded standalone, but when you have them both pointing at the same important area, it's always worth slowing down, take a closer look. Chances are you got a good opportunity on your hands. Oh, we were looking at this article. I never did get John's full thought on it, but this is really important, okay? COMEX, running out of gold. Now, when you buy a futures contract, most people don't take physical delivery of the underlying commodity, but you can. Most people aren't ready for a truck to back up to their house filled with gold bars, right? But some people are, all right? So people who have elected to take physical delivery on gold don't have any. Producing as many, this is from Australia's largest gold refinery. We're producing as many kilobars as we can. We're probably churning out 7.5 tons of them a week at the moment, and we're forward sold well into May. That's from the Perth Mint. A very large portion of those kilobars are ending up as COMEX deliveries. Because of what's happening in the gold market, people who might normally not elect to take physical delivery are whistling a different tune today. And the futures spot premium has compressed. Now, whenever you buy a gold bar or some type of gold bullion coin, I'm not even talking about the numismatic coins or the ones that have, like the ones Dr. Tom talks about. They have added value because of their rarity, their uniqueness, that kind of thing. I'm talking about just things that are minted, gold or silver, and they, you know, like a silver coin has an ounce of silver, well, whatever silver's trading at right now, that's called the spot price. But it them money to turn that silver, that raw silver, into a bar or into some kind of coin. Typically, I think you would pay 10 to 20%. Let's say silver's trading at $15 an ounce. To buy an ounce silver, I think they're called a Walking Liberty or Lady Liberty, you'd probably pay about $17 and change during normal times. I think right now it'd be more, I think it's more like $22 or $23. So you're going to pay a larger premium to buy physical gold right now because of all that's happening in the world and in the markets. And that's if you can even find any. You heard Dr. Tom on the show last week talk about he's been hitting up all of his suppliers. You know, he's a guy with lots of suppliers. That's what he does for a living. So he's got a lot of connections in the gold and silver business. And he himself has been having a hard time actually getting gold. Remember, you don't own it if you can't hold it. Okay? In theory, you may own it, but if you can't hold it, you really don't own it. Now, there are ETFs out there like GOLD and SIOV. They create the impression that if you buy shares in this ETF, that you actually own gold or silver, because we've all been told diversify your portfolio. A certain percentage of your portfolio should be in precious metals. Okay. Well, if you buy shares in an ETF like GLD or SLV, what you have is you have a piece of paper. It clearly says in the prospectus that they're not obligated in any way whatsoever to take the money that you give them for a share in this ETF and go out and actually buy gold and silver with it. It's buried in the middle of the prospectus. You'd probably miss it. Most people don't even read the prospectus anyway. But it's there because one day on the show many years ago, I had the prospectus up on the screen and we went to that little fine print paragraph in the middle of this lengthy prospectus where it spelled it out in not quite so plain English, but we dissected and diagrammed the sentence, and then we all knew better. Okay? Now, as a trading vehicle to buy shares in GLD or SLV, you know, that you're planning to hold for, you know, a few days, a week, a month, okay? There's nothing wrong with it as a trading vehicle. But as an investment, if you're trying to follow that rule of thumb that says, you know, you should diversify your portfolio and you should have at least 10% in precious metals, okay? That's precious metals, not precious paper or semi-precious paper. If you can't hold, you don't really own it. Imagine all the people that own all the shares in GLD and SLV. What if everybody all of a sudden said, hey, you know what? I just want my silver. I just want my. I don't know that they would laugh on the phone at you, but let's see what the volume is today. GLD ETF. Okay, GLD, which is a piece of paper that represents gold. It doesn't mean that you actually own any gold. It's just a piece of paper that represents the price of gold. I know it's crazy, but it's true. Let's see. Today we opened at $155 a share. Hit a low of $1.54, high of $155.94. 7.4 million shares have changed hands today. The average volume over the last 10 days, 10 million shares. Probably one person didn't buy all those shares. And some of the people understand that they don't really own gold or silver. Again, they understand it as it's simply a trading vehicle. What bothers me are the people out there who aren't, you know, financial geeks, and they don't understand. You know, their neighbor has some Krugerrands in their safe, and so they go, well, my neighbor's pretty smart, so they go buy some shares of this gold ETF, and now they think they're on equal ground, on level ground with their neighbor who has the Krugerrands in the safe. It's just not true. I think it's wrong. I think something should be done about it to make the public, the buying public, more aware, but you know, just my opinion. Time now for our good word for the day. And today we're going to talk about prayers that don't work. Huh? Psalm 35:13. My prayers return to me unanswered. There's even a country western song. God's greatest blessings is unanswered prayers. Misdirected prayers. Some people turn the blessing at mealtime into a public airing of their frustrations. Others bounce their prayers off God, hoping to hit the person across the table, the one they're trying to win to Christ. Don't. God gets enough bad press without you adding to it. Jesus said in 6:5, when you pray, like the play actors, judgment prayers. In one church, a childless couple was praying for. The prayer group arbitrarily decided the husband wasn't godly enough to be a father, so they spent their time asking God to change him. If God gave children only to perfect parents, the human race would be extinct. The Bible says in Daniel 9:18, we make this plea not because we deserve help, but because of your mercy. Quorum-based prayers. You think there's a better chance of getting your prayers answered if you involve a lot of people, like having a quorum at a business meeting. With God, what matters is the faith with which you pray, not for people. Not that there's anything wrong gathering a group of people, you know, to pray together corporately. I think that's a great thing. I think God thinks that's a great thing. But at the end of the day, it has to do with the faith behind the prayer. Jesus said in Mark 11:24, whatever you ask for in prayer, believe that you have received it, and it'll be yours. Now, when you face a situation that's too big to handle alone, it is wise to reach out to someone who really knows God, someone who's no stranger to prayer, who can pray in agreement with you. Which raises the question, do you have prayer partners that you can call on? Or maybe you're a prayer partner for someone else. If not, then you begin praying for him to send someone to come alongside you, to pray with you, to pray for you, to come into agreement that God's will be done in your life. Bert just made a fine post. I'm going to share that with you before I go. If you're a bear and looking for a spot to get short the ES, it's time to take a serious look. We're banging our head against the BBC on the weekly chart. Okay, this is the S&P weekly. We're banging up against the BBC. All right, now let's go to our daily chart on the S&P. We've already been there today, but let's go back. We also know that on the daily chart, we're at a spot where the potential to find good resistance is very real. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.